Yes, Mr. Chen. Yes, I understand. Mr. Chen has respectively discontinued our service. That's it. That was our last client. I don't think the company gonna make it any longer.
But I'm sure another opportunity will present itself.
I represent a very large firm with directors of diversified interests in the public and private sectors, both domestic and international. From time to time, we scout the landscape for promoting talent to portal retail.
Retainer?
Why are you approaching us and not a larger firm, Mr.
My name is Mr. Wilson, Director of Legal Regulations at JVR.
So why us?
Obviously, the larger firms won't be able to provide the same hands-on experience that H&M have.
It's a fair question. I'm here because my employer does extensive business in Melbourne, and who knows it better than two local boys who graduated from a national university. You set up shop right here in your own backyard, despite the fact that both of you were made very lucrative offers from BDO from Brisbane via your internet.
You've certainly done your homework.
My employer expects no less, I assure you. All my employer wants is for you to continue to be ethical, decent men, good auditors, and for that, and nothing more than your exceptional skills and your discretion.
Only thing is, that will mean this engagement will be very expensive.
That's more than fine. We will be willing to pay anything.
Perfect. I'll send you an engagement letter in the coming days with our rates. Considering you're a new client and you're a billion-dollar company, our rates are going to be fairly expensive because we're going to have a larger sample size of testing.
I'm sure. Thank you for your time, gentlemen. I'm sure your secretary will show me out.
Something just didn't feel right about this guy. And what about the workload? We don't have the manpower to handle an audit this size. We're going to have to hire more associates and more audit juniors.
You were the guy who wanted to find a new audit opportunity.
Yeah, but I didn't have my sights set on a high-risk audit. Something might be up with him. As we spoke briefly with Wu-san in our induction meeting, there's going to be an extremely high inherent risk, high control risk, low detection risk. This is due to another number of things. One of the main things is a new audit company. We're going to have to look through this financial year and then the previous financial year as well to make sure that their statements are correct. Another thing is, since they're a new startup tech company which doesn't have high revenues and isn't making super large profits, we're going to have to base our materiality off equity instead of revenue. 2% equity we're going to start with, being a billion-dollar company, it's going to be set at 220 million. All right, so this is going to be what we're going to start with the audit. Now, the main thing we're going to look at is cut-off testing is going to be the first task. We've got to make sure that expenses and revenues are placed in the right period. So when you start undertaking that performance, on caseware, once we load the trial balance that they give us, you will have to grab their invoices and make sure that this data matches.
This is the 7th email I've sent to JVR's accounting department about getting supporting document for you to compare with.
Have you tried CCing JVR management team about this? Maybe they can corroborate the documents.
I tried that. They gave me the same story. Sourcing your document is a timely process and will take some time to gather all the information you need. We thank you for your patience.
Maybe they're hiding something.
Did you not hear what I just said?
Come on, Tian. You sent out that email how many weeks ago? They avoid the questions once, okay. Twice, well, we'll allow it. Do it several times, it clicks that they're hiding something. And I think I found out why. See here, when a VR headset is sold in bulk to a wholesaler on credit, Amazon in this case, the proceeds go into the revenue section under the income statement for the correct financial year. However, the expenses associated with that are also not appearing in the same financial year. They are being pushed forward to the following financial year. This is certainly going to be a material misstatement. We're going to have to increase our testing on this. See, look at my working paper I've been working on. JVR is recording higher revenues whilst decreasing assets, leaving the liabilities and equity alone. According to their MyOb entries, the dates are correct, but they aren't lining up with any of the purchase invoices sent by Amazon. JVR clearly doesn't want us to know about these misstatements.
So we conduct more sample testing, say 30 bulk of sales, picked at a random rate. Conduct a test, see if we find any more similar flags. We'll dig deeper, find more issues, see if any pattern emerges.
Good evening. Is this the accounting assistant at JVR? Right, thank you. This is Jacob, the senior partner of the auditing firm. I would just like to inform you that we have found material misstatements during the cut-off testing of your financial statements. I was just calling to inform you if we could please schedule a meeting to go through these and go over these potential misstatements. Thank you.
The auditors from JVI are here to see you, sir.
Send them in. Gentlemen, please take a seat. I was told by my assistant that you auditors found several red flags in our financial reports. I assure you, these errors are nothing but your own. Our internal controls are frequently revised against accounting standards to comply with the law, upholding nothing but the highest quality of professional reports. Rest assured, we are doing everything in our power to gather everything you requested, but these things take time.
How about we do what you paid us to do and communicate these errors with you?
Starting with why JVR failed to supply us with supporting documents regarding several sale invoices for Amazon bulk sales.
I'm sure I don't know what you're talking about.
The way that we found this error, firstly, is we did cut-off testing. The process of the cut-off testing is where you got to make sure that the allocation of expenses is put in the right financial year and the revenues. So, in this case, we did 10 days before the financial year, 10 days after the financial year. We sampled 10 different transactions within that period, and every single one of them, the revenue was brought forward and the expenses was pushed back. This trend was able to be found out across many, many more once we increased our sample size. This is when we knew that there was a material misstatement in these financial statements. And this is why we have come forth with an adverse opinion.
All of JVR's invoices are correctly recorded on the day they occur.
We thought you might say that. That's why we contacted the sales team of Amazon for supporting documents, which they instantly supported us with. I even inquired the date they recorded, and it was correct, unlike JVR's.
It seems that you've caught us. Now you've left us with the difficult choice of deciding what our next course of action is.
Unfortunately, we are going to have to report this material misstatement, and we will include it in our adverse opinion for JVR.
No. Our next step is deciding how much it's going to cost for you young auditors to sign off on this.
Are you trying to bribe us or something?
JVR is a very powerful company, and we can offer you both 10 times your original salary. All you need to do is give us an appropriate review, a minor inconvenience to you.
Come on, Tian, let's go speak to the CFO. Thank you for seeing us.
Please, you are auditors for JVR. Addressing your concerns are one of my highest priorities. Now, what news do you bring?
Based off the trial balances that we published on our lead sheets within our caseware auditing file, we determined that the dates did not line up. Originally, we had a fairly small sample size. That was the requirement based on our professional judgment of what we needed to have for this audit. However, upon the first few not lining up, we then increased our sample size to make sure that we could have some assurance. Upon that, that's when we're able to find that it was a material misstatement that had occurred. On the increasing the sample size, and the account manager did not give us any more supporting documents and was being very uncooperative, we decided to take charge and now speak to you now.
Now that's a bit of a problem. See, we need those sales brought forward into this period and the expenses pushed back to represent a stronger JVR. For I'm leaving soon, and I need to represent and make sure this company grows proper. You see, if the stock prices rise above my quota, I can leave with much green in my pocket, and I intend to. You're riding in here to battle without any armour. JVR is very strong and powerful and we will crush you. We will make sure you never get auditing work ever again.
When you get new auditors, they're going to have to do their ethical background checks and speak to us in why you got new auditors. And that's when we'll be obliged to tell them legally what has happened here, and they will have to also report an adverse opinion. Along with that, we have now suspected that you have done fraud. This means under the Corporation Act 311, within 20 days we will have to speak to them, let them know about this issue, and there'll be no hiding for you. There's absolutely nothing you can do in this situation, so I suggest you save your money and not waste it with a new auditor, and let us submit an adverse opinion and sign away that, and we will be not auditing you next year.